Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. What is your stock's price target? We're going to get the answer to that question with Kevin Matras. Kevin is our top stock screener and head of our Research Wizard division here at Zacks. And that's what he's talking about this week. Ironic, isn't it?
Right.
I've always wondered how to figure out a price target for a stock.
Right.
It was one of those burning questions.
Well, we're going to answer it here today. I actually talked about this back in February when the market was getting ready to make new lows, and I think at that point everybody was wondering what their stock's price target was going to be because they were wondering how low their stock's price could go.
Right.
Today we find ourselves talking about the price target, and it's interesting because after the big run-up that we had just seen, now everybody is wondering, is their stock overvalued? How high is their stock price going to go? And all this other stuff. But either way, whether it's going up, whether it's going down, it's important for people to know how to calculate their stock's price target all on their own. Now, you can do this in one of several ways. You can either do this with technical analysis or you can do it with fundamental analysis. Today, we're going to be focusing in on the fundamentals.
All right, so let's take us through the steps. How do you create a price target of your own?
We're going to be using the PE ratio to calculate it. And again, as I was saying earlier, a lot of people will use the PE ratio to determine a company's undervaluation or overvaluation. But you can also use the PE ratio to determine, if your stock price should be going up or if it should be going down. So check this out.
All right.
The two most common PE ratios used are PEs using the trailing 12 months or 4 quarters of earnings. And the other one is PEs using the F1 or current fiscal year estimates.
Okay.
The calculation for the PE is pretty straightforward. It is price divided by earnings. So if a stock's price is, let's say, $30 and its earnings are $1.25, its PE ratio would be 24. If that stock's earnings, though, rose to $2, the PE ratio would now be lower at 15, which is $30 divided by $2 in earnings. That equals a 15 PE. Mm-hmm. Now, the most logical conclusion at that point is to see the stock prices rise because you would expect to see the PE ratio get to the previous multiple. The reason why I think this makes sense is because if people had just been willing to pay 24 times earnings, they're probably still going to be willing to pay 24 times earnings, if not more, if they believe the growth potential is going to continue.
Interesting stuff.
Yeah, it really is. And you're going to find, though, that when you're trying to figure out what a company's PE ratio is, and this is part of the equation, you're going to find that a stock's PE ratio using the EPS actuals is actually higher than the PE ratio using its forward estimate.
Oh, why?
Well, the reason why that is because you have the uncertainty over projected earnings, and then you have the certainty over actual earnings. So as the company continues to move forward and as the company is meeting its projections, right, you're going to see the forward PE ratio start to rise and it's going to increase, which means the price is going to be reflecting these changes as these new earnings projections are coming to fruition. And as optimism grows over the company's growth prospects, you may see the PE ratio not only get to its previous multiple targets, but you may even see the PE ratio get above those previous multiples.
So what's the calculation then for figuring out a price target?
The calculation is this. It is price. This looks kind of goofy up here, but let me explain it. It is price times the current PE ratio divided by the forward PE ratio, and that equals the future price or the price target. So, a little clarification.
Please.
Let's say a stock's price was $50. Let's say its current PE was 20, and let's say its forward PE was 15. The calculation is $50 times 20 divided by 15 equals $66.50 as your price target. A little additional clarification. Here's another way of saying it. 15 goes into 20 1.33 times. So $50 times 1.33 equals your $66.50 price target.
Why didn't you say that in the first place? The old Gazinta method.
I had to build up to something.
If you'd have just said Gazinta right off the bat, I'd have gotten it like that.
Nice.
So what about screen parameters here?
All right. The screen I'm running today is it's a pretty simple screen. I am first looking at the PE ratio. I want the PE ratio to be less than the average PE over the last 5 years. Next, I want the price target, that calculation we just did. I want the price target to be greater than 1.2 times the current price. And of course, I am using the Zacks rank, and I want the Zacks rank to be less than or equals to 3.
And stocks that have come through the screen.
Yeah, the number of stocks that came through, I do want to say this. It's interesting because after the run-up that we had seen, there were fewer stocks that had come through recently than I have seen in the past. So is that suggesting that stocks are getting to a point where they're properly valued or maybe overvalued? I don't know yet. But it was interesting that there was fewer stocks coming through than I had expected. Okay. But anyways, here's 5 of the stocks that made it through. You've got Air Methods Corp., Consol Energy, Consolidated Water Company, Newmont Mining, and NOVN Pharmaceuticals. A lot of different companies, a lot of different industries, but all of those companies are currently trading at least 20% under their projected price target, so these are very interesting companies to look at.
And do you own any?
Of that list, no.
All right. If you want to check out some other stocks that came through this week's screen for Kevin, go to Zacks.com's homepage, run down the homepage with your cursor until you get to the picture of Kevin. And that's like a landmark, picture of Kevin, headline next to it. Click on it. It'll take you to this week's text version of the screen of the week. Kevin is the head of our Research Wizard division. You hear me say that all the time. He uses the Research Wizard software backtesting tool to achieve all of the screens that he shares with us here. And if you want to check out more about the Research Wizard software package, go to Zacks.com/Research Wizard. With Kevin Matras and the screen of the week, I'm Terry Ruffalo.